Hello, guys, and thanks for joining my 1% Forex Basics class, course, whatever you want to call it. So, if you're watching this, it means you filled out the form on my website and you could be interested in joining my 1% club. So, I made this basics course. I'm going to go through a lot really fast. If you have any questions, email me at claytona@AllenFx.com or find me at DTP show at Gmail, all sorts of places. But I'm going to try to get through this in under an hour. It's a lot. So if I go through something too fast, feel free to reach out. Again, I'm Clayton Allen, host of the Day Trading Plumber podcast and founder here at AllenFx. And what started out as a really good way to help my friends and family have the same success in Forex that I have had in the last decade, enough to where I could quit my full-time job and just trade for a living, is now kind of turned into a great business idea where I could help more and more people out there. And I'm deciding to do that through a series of classes as opposed to just copying my trades, as I am done filling those slots because there's a lot of work behind it. And when something goes wrong, meaning a glitch with the software, it's a lot of work. So enough about that. Let's get going on this class because we have a lot to do in a short amount of time. So, again, I'm Clayton Allen. I started AllenFx. I want to be as completely honest, open, and transparent as possible with no flash, no flex, no BS. Here's a link to my website. You already have it because you went there to get this video. And hopefully you guys have got into my free Telegram channel and are starting to enjoy some of the trade analysis I'm putting in there for my viewers and followers. Right here's a link to my podcast. If you haven't checked that out yet, please do so. It's called The Day Trading Plumber. I share stories about how a plumber views the markets, I guess. Sorry about that. So I got to make sure I keep my head in the right spot in this presentation this time. So what is Forex, guys? Forex is, well, let's just look at the definition. So Forex is the foreign exchange currency market in the global decentralized or over-the-counter market for the trading of currencies. Market determines Forex exchange rates for every currency. It includes all aspects of buying and selling, exchanging currencies, and determining prices. That's the Wikipedia. It's commonly known as FX, FX trading, foreign exchange. A lot of people are confused. Like when I first started telling people I was trading Forex, they instantly think, well, it's trading. I'm buying and selling stocks. Well, no. Basically, what you're doing in Forex is you are taking an educated guess on if one currency is going to devalue or value up against another currency and as a pair. So an easy way for me to say it is if you're betting that the Broncos are going to beat the Patriots and the name is Broncos Patriots, meaning they're at home, you're going to buy that pair. If you think the Patriots are going to beat the Broncos in that same scenario, you're going to sell that pair. We got more about that later. Okay, the Forex market is a network of institutions allowing for 24-hour day trading, 5 days a week. Okay, so here in Denver or in the States, the United States, Saturday is the only day there's no trading available. Now, there's aftermarkets tradings on some brokers, but for the most part, Saturday's the only day the markets are closed the entire day. So oftentimes you'll hear me say 6 days a week because you can trade on Friday before close and Sunday after open, the last half of those days. So they're not the best times to trade, but you can. Okay, retail traders can open an account and buy and sell currencies, profit and loss from those differences in price. Just like I said earlier, if you buy a pair, you're betting that the base currency goes up, and I got some diagrams later in this course to show you guys. Okay, there's other ways to trade using forwards and futures contracts. I don't have a lot of experience in them, but I did put that in there. I do know a few people who trade futures on Forex, and there's you also could trade the indexes, the dollar index. You could trade gold, silver. There's a lot of things, and you'll have to look at whatever broker you are planning on using or currently using, and what financial instruments that they provide. Forex market is the largest market in the world. The average daily volume is over 500 trillion per day compared to the U.S. stock exchange at 250 billion. So this is in comparison. So Forex is Jupiter, and the U.S. stock exchange is only the moon. So volume's never an issue if you stick to the higher liquidity pairs, which we'll talk about later. Your broker will execute your trades almost instantly. Now there's slippage and spreads that you have to be worried about, but excuse me, but for the most part, most Forex brokers will instantly, if price is at the price you want, you buy it, bam, you get it there. No more waiting for orders to get filled. All right. So I did not. I think my head was fine up there. Sorry about that, guys. Trying to make a really good video and not have. Okay, retail traders typically don't want to have to deliver a full amount of currency they are trading. Instead, they want to profit for price difference. So brokers will let you carry trades overnight. Now that may come at a cost. Believe me, swaps can add up, and we'll get more into that later. Okay, so can trading Forex replace your job? Absolutely, it can. It has mine. It has many other people. I guess a very small percentage of people. But I'm not gonna blow smoke up your butt. It is statistically not going to happen. And I say that with all the love and care in my heart. But I want you, if you're just starting out in Forex, or if you've been doing it for a while and you've been struggling, you probably already know, Forex is not easy. Trading's not easy. Trading any financial instrument is not easy. Most of which because it's controlling your emotions. And we do that through a series of using tried and true strategies, creating a trading plan, and making sure we follow those rules. Now, humans are emotional beings, and that gets really hard. And oftentimes you hear people say Forex is a scam. And don't get me wrong, there's a lot of dishonest people scamming people, but the actual marketplace itself is not a scam, and you can make money and you can replace your job, but it's not quite as easy as a lot of people out there are saying it is. So trading Forex or any other financial instrument should be treated as a business, not a fun game or gambling. So true. I hear it all the time when I tell people I'm a full-time trader. They're like, so you're a full-time gambler? No, and we'll talk about that later. But I treat my trading just like a business, and if you're going to do this right, you need to as well. You don't go into a business, or I hope you don't, just willy-nilly and not having a business plan, not putting together what items you're going to sell, how much you're going to sell them for. All of those fun things you put in a business plan are also going to be key parts of your trading plan. It is a business, guys. And yes, it's going to be just as hard as any other business, if not harder. Compared to equities trading, stocks, Forex requires a much smaller investment size. So people with less risk capital or smaller balances tend to flock to Forex for this reason. It can, some brokers allow you to open accounts as small as $100. I highly recommend you don't waste your time. I would tell you guys, if all you have is $100 of risk capital, great. Demo trade. treat it like a business, perfect your craft, and tell you at least have $1,000. $1,000 is, when people ask me, still at the very low end, and you have a super high risk, but you can manage an account from $1,000 up if you have the discipline, meaning the one trade at a time, the smallest position size your broker allows, and you get consistent gains. And yes, you won't be a millionaire overnight, or probably even in 10 years off $1,000 account. You could. Very few have done it. But it is doable. The act of trading, executing the trades, is very easy compared to other physically demanding jobs. Me being a former plumber, pipe fitter, I've had those physically demanding jobs, and it's fine when you're young, but as you age, those get tough. And most people hopefully shift themselves into a scenario where they're in management, or they find something like trading. And I will tell you, my back loves it every day. I just get to trade, and it is doable. Very minimal time commitment. So yes, let me tell you guys, this is a little contradicting, because you're going to spend lots of time in the beginning, lots and lots of time. That's where, people kind of get this messed up. But the actual act of trading, once you have a solid plan, solid strategies in place, you've stared at charts, you know what you're looking for, it doesn't take much time. I spend maybe an hour and a half in the mornings before the US Open, and some time at night. And oftentimes I look at it too much, and it gets me in trouble. Those of you that followed me long enough, I use a combination of EAs, which we'll talk about later in this, and discretionary trades for my own portfolios. And the use of EAs can really greatly reduce your amount of time spent staring at charts or waiting for the setups. We'll get into that more later. So it requires very little overhead to run. So I started with a $300 refurbished computer that I pigeonholed out of my capital, and said, you know what, I'm going to need a trading computer. Well, let me tell you guys, don't go out and buy these very expensive 18 monitor trading packages. You don't need it. Quite often, even now, you can start on a device, your phone. I don't recommend you trade live capital until you have learned charting and stuff, but you can start a demo on your phone right now and start trading a demo account and playing with it. Now, the charting software on your devices isn't that great, and the small screen, so I don't recommend you go full time. And also, trading from your device it can create some bad habits that are going to be hard to break later. So I caution you guys. But it is doable. You don't need 19 monitors. You don't need the world's fastest computer. A simple desktop computer or laptop will do just fine. Okay, if done right, Forex is recession proof. So this kind of falls true with any trading, right? It's not just Forex, but yes, I mean, we're in the middle of the COVID-19 nightmare right now, and, we're making money. And if you have your money in a 401k and you've handed it over to, the established money managers, you probably took a decent decline here in the month of March, which is fine, because long-term investments, they'll do that. Trading is not a long-term investment. Yes, you can make gains on down markets. You can make gains on up markets. You just have to pick the direction right, which is the trick. It's going to be the trick. Oh, wow. Sorry about that, guys. Hopefully I got that corrected moving forward. I just got to get in the habit of looking each time. So, yes, you can replace your job. All right, let's talk about some misconceptions of trading. Okay, trading's easy. We've already covered that. The act of doing it is. Being good at it is not. Trading makes you, you can make 1,000% a month. Yes, you could. The likelihood, absolutely not. And the likelihood of you losing whatever you put at risk to do it is way bigger. Um, I, the statistics are true, people. 95 to 98% of people who put money in a broker account and who go after it lose it. Not all of it, not that, but they quit and they take a loss. That is true. The whole goal of these classes that I'm putting together and anything I put out after these classes here at AllenFx is going to be to help people avoid that. Luckily, I've never blown up an account, never even blown up a demo account, which kind of told me maybe I have what it takes, the secret sauce, to be disciplined enough not to chase waterfalls and go after those big home run trades and, you know, hold on to a loser too long and destroy your account. Some other misconceptions. You can learn this overnight. No, you can't. It's the biggest challenge you're gonna have is learning how to control yourself. Learning the technicals, learning the basics is fairly simple, but following the rules and waiting for those entries and exits is the hard part and what most traders are challenged with. Okay, so trading is a business. I want to talk about, let's make sure my head's in the right spot. Okay. I want to talk about best times to trade, right? So the different trading sessions and best times to trade. So I found this online. I'm not going to take credit that I built it, but it's pretty basic. This is in New York Standard Time. And now, don't get me wrong, there's most of us in the States and across the world, we have daylight savings time. So this may be an hour off shift of where you're at today. But for the most part, we'll get the gist of it. So I want to turn my pen on. So the London session, which is starts at 3 a.m. New York Standard Time or Eastern Standard Time in New York, is revered as the best time to trade. This is the most active time, and it's because all the bankers are waking up in London, and it's not the beginning of the new day, but it's the new day for the largest economies in the world. That we'll talk about the Sydney and Tokyo sessions when we get there. But as a discretionary trader, and you'll learn what that term means, this session is the best session to trade. Now, it dies off a little bit until New York starts right here, and then it gets really hot and heavy again for a couple hours right here, and then we kind of get a die off here, and you will see it picks back up near the end of the U.S. session a little bit. But the Sydney session and the Tokyo session, I'm getting all crazy here. Those sessions are typically pretty slow. Now, I've had some really good trades in those sessions because, again, remember, I got into Forex working full time, and what lured me in was the fact that it trades 24 hours a day, 5 days a week. So I was like, well, shit, why can't I, get off work, get my kids put to bed, and bam. And you can. But I will tell you, if you're in the States, typically by the time you're home from work and the New York session's closed, we're in the Sydney and the Tokyo or the Asian, and things are pretty slow. Now, I will tell you, let me erase that stuff. Bye. I will tell you guys, there are certain pairs, right? Like the Australian dollar, New Zealand dollar do pretty well in this session. And then JPY pairs do well here. So if I'm trading these sessions, meaning discretionary trades, I'll tend to look at those pairs. Just like the US pairs are going to do well here, and then the Euro and British pound pairs, Swiss franc, all of those pairs, this session's great. However, almost all the pairs are very active during these two sessions because the two largest economies in the world are moving lots of money. And remember, what moves the markets is banks doing business with each other. So, well, I jumped ahead. Okay, so trading is a business. It's a business that has very little overhead, as we discussed, and it has endless earning potentials. That could work both ways. You can't really say endless loss potential, but you can take some substantial losses, just like in any other business if things go wrong. But you can have endless earning potential. And that is another great thing to get to teach yourself. Why it's important to teach yourself how to trade is you could do it in, shitty markets. You could do it when you're laid off. You can do it while you're at work with the use of EAs, and we'll go into that later. But there's no cap. You don't have a boss telling you, this is all you're worth. It's all we're going to pay you. And, that is great for some people. Some people, that kind of freedom is just a mess. And they need to be told what to do every day. They need to be told when to wake up. They need to be told what to do. So this is where you're going to have to dig deep inside yourself and ask yourself, are you disciplined enough to do this? And are you disciplined enough to get your butt out of bed in the London session to trade? Are you disciplined enough to learn how to use EAs, program them, go through the set files, tweak them, and all these things I'm going to teach in these courses, but it's out there, guys, and you can do it. I mean, I'm a dyslexic plumber, and you'll probably see some misspellings and stuff in this presentation. Who's figured it out? And I don't like saying figured it out because I'm still learning, but I've figured out how to make consistent gains, and now I live off of it. So it is possible. Risk management is definitely key. You're going to hear this term all through all the trainings that you take, whether it's with me or anyone else. The key is risk management, people. You're not going to win every trade. It's not possible. Now, I have a very high win percentage. I'm in the 87% for 7 years. However, that doesn't come without some pain and drawdown, and we'll discuss that later. But risk management is key. I mean, my good friend Rob Booker told me, or he used to preach, the only rule there is in trading is not to let a loser destroy your account. And he's right. You can pretty much do anything you want, but just don't let a trade destroy your account. EAs, right? You've heard me say it a few times already. I use them in my trading. They are wonderful tools. There's thousands of them out there. What they are and what an EA is, it's an expert advisor. So if you use an MT4 platform, you can code a robot or you can program to take the trades for you. It will execute open. It will do as far as you program it. Some are EA expert advisors are trading assistant robots, meaning after you open the trade, it will manage that trade for you. Some will open them, close them, enter stop losses, enter rollover trades, you name it. You could go anywhere with these, and they're amazing. Once you've harnessed the power of them, they're amazing time savers. And in my course, I'll show people how I use the EAs I use, how I use the set files, how I created the set files, how I use discretionary trading to help push the EAs, because I will tell you guys, there's no EA out there that's perfect. And if there's someone selling you one saying it's perfect, run. Just run, because it's not true. And they will all break and they will all get in trouble. And that's why you have to know how to read charts, how to discretionarily trade your way out of that trouble. Or, there's fully automated EAs that will close the trades at stop losses, and over time, eventually they will break as market conditions change. So don't trust anyone that says, buy my EA, it's perfect. Yes, they'll make you money for a little while, but none of them are perfect. Okay, trading strategies for trading system. I go a lot more detail into this later, and I want to save some time because we're tracking a little bit behind. So, trading platforms and most common used. So, every broker has their own platform, or most of the big ones do, and they want you to use their platform. But I will tell you, most traders and any serious trader I know uses MetaQuotes because most traders talk in MT4, MT5 jargon, lingo, right? And I suggest if you're just starting out or if you've been trading and you want to be able to use EAs or understand what a lot of people are talking about, use MT4. Get to know MT4, get to know MT5. They're relatively the same, and most people speak in those terms. I use MT4. I got lucky. My mentor got me right into MT4 and never looked back. And thank God he did because, when I first started out, I was using an FXCM demo and their platform. And when I made the switch, it was a little uncomfortable, and I would have hated to make that switch after many years of using a platform. The biggest thing I tell people is, look, if you have a broker now and you're using that broker's platform, what if you switch brokers? If you go to another broker, because whatever, you move across country and now you need a different broker. Now you got to relearn their platform. If you learn MT4 out of the gate, every broker offers MT4. Every broker, or any reputable broker does, because most traders use it, and we demand that they bring it. It's a heavy cost to them, but learn MT4, you'll never have to learn another platform. Now, I'll go into more detail later on different charting platforms that have way better charts. But use MT4 to execute your trades. Brokers and what their role. Okay, so there's a lot of conspiracies around brokers and stop hunting and how they just want to steal your money. And none of that, at least in my experience, none of that's true. So, best way I could explain what a broker is, let's go back to football. You have football teams, right? And they need a stadium to play in. Well, the broker is the stadium. They provide the stadium for these pairs to come in and play. Now, they'll let you take whatever capital or your risk capital and whatever, currency it is. For me in the States, it's US dollar. They'll take your US dollars, your risk capital. They'll hold it safe for you. And then when you buy Euro, Swiss franc, they're essentially letting you borrow their euro, and then they're taking your cash out of your account all digitally really fast, and you've basically placed that trade. So if the euro gains value on the Swiss franc, and you sell that, you sell it, you're going to get more euros back for that trade than what you paid for it, and then that's going to compute to more US dollars in your account. So that's the simplest way I can. The brokers provide that whole game. They provide the whole thing, and they pass your trades up to their liquidity provider called a prime broker. Here in the States, most brokers are allowed to take the opposite side of your trade because that gives them an incentive to make money. However, if you have $1,000 account, more than likely they are taking it. They're not passing it up to their prime broker. And there's rules and regulations around it. If you want to go down that rabbit hole, find a broker, read all the fine print, look at it all. It might scare the hell out of you. But at the end of the day, brokers are the game makers. They're the market makers. They're the ones letting us play this game. Well, not a game. Common mistakes most traders make. All right. Man, this list is long, but I'm going to tell you the top 3. Trading too much. That's right out of the gate. Curb Your Enthusiasm. Love that show. But right out of the gate, most traders feel like they get this feeling like, well, I got to be in trades to make money, so I got to be in a lot of trades. And you're right, you have to trade to make money, but also if you're not in a trade, you can't lose money. So pick your trades wisely. Take a few at a time till you get comfortable. It's really hard to manage a lot of trades at once out of the gate, and it's a good way to blow up your account. Trading too much is an emotional response. And remember what I said earlier, curb your emotions. I will tell you guys, that is the number one mistake most traders do. And it's programmed in our heads as humans, especially if we get into trouble, right? You take a little bit of a loss, you feel like you got to get right back on that horse, right? It's in all these cliche sayings, get back on the horse. And you know, there's a place for that in trading. But getting in too many trades and trading too often and, you know, having a few drinks at the bar and just throwing trades on in front of your buddies will destroy you. I promise you. It may not happen the first time, may not happen the 10th time, but it will catch up to you. In my courses, we're going to a lot about that. Trading too big. This one catches everyone, right? It is, you know, it seems like every time you put on a micro lot, you win the trade. And you go, damn it. And you go back to your spreadsheet and your calculator and this table I'm going to show you guys. And you're like, man, if I would have just did a full lot, it would have been $1,000 winner, not $10. So that catches up to you. And I will tell you guys, part of that risk management, be disciplined. Do not get caught up putting too big of trades on. I know it looks fun and it's enticing and you get those endorphins when it works out. But those are all the things that will lead you down the path of destruction. Why is trading not gambling? Okay, so I hear this all the time. You're a gambleaholic. You're just gambling and it's rigged. Guys, if you're trading right, you have a solid plan. You're using solid strategies that you've tested, that you've practiced, that you know what you are going to do as the trader when things go wrong and when things go right. That's where you got to get. You're not gambling at that point because you're giving yourself a competitive edge. And when you go to Vegas or you go to Blackhawk and you're gambling, you don't have the edge. You never will have the edge. They will never give you the edge. It just isn't going to happen because that's how they make money. And yes, you have a small smidgen of hope to be a winner. But at the end of the day, the longer you sit at those tables, statistics are on their side, and they know that. Otherwise, they wouldn't have a game on the floor where the player has the edge rather than the house. So understand that. And as you go into trading, as you move into this and move from it being something new to something you're going to treat as a business, understand we're not putting trades on unless we have that edge. And you have to know what that edge is and what's going to give you that edge. That's what this class is. That's what having a guru, that's what having a coach, someone who's been doing it for a decade now, can help you with. You just like I walked right into it, right? Using some consulting or mentors, highly recommend it. It's going to shorten that time that it takes you to learn. It's going to shorten your pain in the beginning of taking big losses. It's really going to help you get started the right way. Now, I caution you on who you choose that person to be. Make sure it's someone that you relate to. Make sure it's someone you trust. Make sure it's someone who's going to share all of, both sides of the story here, their losses with their wins. And they're willing to share with you their accounts. Are they even really trading? It's fine if they're not a trader. Maybe they're really a good speaker and they have really good points. But if they're telling you they're a trader and they're not really trading, that could probably be a big sign. Maybe I shouldn't listen to this guy. Or if he's not willing to show you his own accounts, or if he's not willing to talk to you about his biggest losses, or if he's a pompous asshole, it just says he wins all the time. I mean, use your discretion here. If it sounds too good to be true, it probably is too good to be true. And eventually you'll find that out the hard way. So I caution, just like in a real business, you don't take consulting or mentoring from someone who doesn't have a proven track record or someone you can't verify. So get some coaching, get some help, but make sure it's from the right person, and make sure it isn't just going to create some bad habits. It's going to be really hard to fix later. Okay. So what is a Forex pair? So now I'm going to try to not, let me make sure my face is good here, guys. All right. There we go. Let's move this. I'm going to put my face pretty small. Sorry, guys. So what's a Forex pair? So I'm going to kind of quickly go through this. Like I said earlier, when you're trading Forex, it comes in pairs. But these are the 8 most common currency symbols: the US dollar, the euro, the British pound, JPY, Swiss franc, Australian dollar, New Zealand dollar, and Canadian dollar. And these are the abbreviations for those. Now, what we call the majors, right, are all of these pairs to the US dollar, because the US dollar is revered as, you know, the currency, the base currency. It has the strongest economy. This may shift down the road, but it's still looked at as, very high demand, and most countries will even accept US dollars if you're over there. Lucky me, I'm an American, so it works out. Now, I have some other currency symbols. These are commonly known as exotics, right? The Swedish krona, the Danish krone, the Mexican peso, which we'll talk a little bit about later. The Singapore dollar, South African rand. Now, these are easily tradable against these other pairs, but I will tell you, if a broker allows it, I caution you, especially in the beginning. When you look at the charts of these exotics, they move hard and fast. And what most traders look at is, when they're looking at charts, they see these huge moves and they start to fantasize about, man, if I was in that move, how do I get in that move? I'm just going to try to steer you guys away from that. Don't do it. We've all done it. Don't do it. Stay away from these until you have lots and lots of experience. You understand the margin it's going to take out of your account to trade these, the spreads, how to calculate pips. They get really complicated with these exotic currencies. I highly recommend you stick to the 7 most common liquid pairs. Liquidity means there's lots of people trading it. There's lots of volume in there. Typically, you're going to have much smaller spreads and much smaller swaps on these pairs, where if you get caught into a trade overnight, you're not paying really high swap charges, as opposed to where if you're playing with these. These are the 7 majors, right? I just stick to these guys out of the gate. You're going to have a lot less learning curve, a lot less problems. Now, I'm not going to say they don't move hard and fast. They can, especially on fundamental news breaks, which, we go into in these courses. But stick to these. Forgot a little slash there. See, I'm not perfect, guys. But stick to those. If you guys want to see all the pairs, there's thousands of them. Here's a good link where you can see all the pairs and all the exotics. And by all means, if you're on a demo account, play around with them. That's how you get to know. But don't do it on your live account until you're ready. Okay, let's make sure my face is in the right spot. Ooh, I could get a little bigger here. Okay. All right, guys, how are Forex pairs quoted? So this is a snapshot of my own MT4 account. I want to break this down. So Where did my mouse go? There we go. Do I have the... There we go. So there you can see it better. So right here you can see the euro US dollar, and I think this was pulled after the market was closed. So you can see some of these spreads are pretty big. But euro US dollar, the bid and ask price. So the bid and ask price, sorry, got a meeting. The bid and ask price. So euro US dollar, the euro is the base currency. It's the first one mentioned in the pair. And then the quote currency is the second one mentioned in the pair. And you can see the bid is 1.10266. Now, this last 6, it's called a fractional pip. No one cares unless you're trading nanos. And my broker doesn't trade nanos, but whatever. So the ask price is 5.3 pips difference. And you can see if you take this number, subtract this number, you're going to get 53, move a decimal point 1 over, because remember, we don't care about the fractional pip. It's 5.3 pips. That is called your spread. So if I were to open a trade, let me put my pin on. Let's say I open a trade at this level. Price is going up. And if I open at the bid price, it's going to start me out 5.3 pips in the negative. So every time you open a trade, it's going to start out negative if there's a spread, which most of the time there is. And then as price goes up, you'll hit break even at 5.3 pips in the positive direction that you traded. Now, as it keeps going up, you make money. Well, the broker makes that 5.3 pips on your trade. That's how they make their money. So understand that. That's how you see your swap or your spread. And that's a quick, easy explanation of what that means. Now, how do we calculate pips? So on most pairs, most major pairs, the fourth decimal point. So right here, if this was a 1-6, it's moved 10 pips. You guys see that? Man, that's bad P. So it's moved 10 pips because every tick here is a pip. Now, I want to make sure I explain this. JPY pairs are different. You can see up here, USD, JPY. See how they're only giving us 3 instead of these 5? Well, this one's a fractional pip. We don't care. So on the second decimal point is every tick here is a pip. So just on JPY pairs only, understand it's the second decimal point. That is how you calculate pips. I'll show you guys later on the charts how we are going to look at those on a chart. But this is how a pair is quoted, how we calculate pips. I know I moved pretty fast, but you can always come back to this and decide later, figuring it out. Now, what is a pip worth? Okay, I want you guys to understand a pip is worth pretty much the same on all those major currency pairs. And remember how I was telling you to stick to those in the beginning? Well, exotics and some of the crosses are different. So what I want to break down for you guys is contract lot sizes and value per pip. So a standard lot is 100,000 units. So if you're buying euro US dollar, you would just buy $100,000 worth of euro. Now, in MT4, which I told you guys to learn, that's going to look like you're going to put in a position of 1.0. That is a standard lot. Now, every pip movement, you can make or lose $10. Okay, so you could see how that example we had in the last thing, a 10 pip move, you just made $100, which is not a big movement. So, putting on a standard lot, you can make money really fast. You can lose money really fast. You know, I'm going to go ahead and say you shouldn't be trading full lot positions at all until you have at least $30,000 to $40,000 balance. Now, don't get me wrong, you can definitely execute that size of a trade on a $10,000 account. However, the risk is super high, and we're not going to go down that rabbit hole. But for sake of just learning what pip values are, this table works really good. I'm going to go ahead and erase my doodling off of there. So what is a mini lot? A mini lot, an MT4 is 0.10, but it's 10,000 units. You're going to make $1 a pip. Okay, and then so on and so forth. Micro lot is $1,000, 0.01 on MT4. You're going to make 10 cents a pip. Oh, bummer. That's not that much money, Clayton. I want to be up here. Well, I'm going to tell you guys, on my portfolio, my EA settings, I'm still taking these size positions on a $10,000 lot, on a $10,000 balance. Sorry. So that will tell you the kind of risk management I'm using on my own accounts. And I still make 1% a week of my total balance. 1% total balance gains each week on an average of 7 years trading, micro lots. Now, nano lots, I put this in there, but the broker I use doesn't let you trade it. I haven't used one yet that lets you trade it. But it's in here for you guys. You make 1 cent a pip. If you're with one of these brokers that lets you do a $100 account, make sure they let you use nano lots so you can practice with very small positions. Okay, this table represents standard pip value. If you guys want more information, go to investing.com. This thing, if you want to see the pip calculator and all the pairs and all the crosses, because they do differ. When you get away from the majors, you may not make it $10 a pip. You may make more, you may make less, but I'm going to tell you guys that the amount of margin you're going to use to take those exotic trades is way bigger, and the amount of spreads you're going to take is way bigger. So things where you get comfortable on these majors, things can change really fast trading those exotics, and a lot of people get caught up in it. Okay, so how do we make money, guys? How do we make money? So what I'm going to do is I'm going to shoot on over to my charts, and I'm going to show you on a charts a short and long trade, and some of the terminology that we see. So give me a second, and we'll be on the charts when we come back. Okay, guys, we're back. Sorry about that. So I use TradingView charts here. I'm going to put a link in this video or in the show notes or whatever it is down there, where you guys can start your own account. It's free. I use TradingView charts to do all my charting. I highly recommend you guys get used to and comfortable with this program, because I'm going to use it in my courses. I'm going to use it in all of my Telegram channels. I'm going to use it in the chat rooms. It's really easy to take a snapshot of a question on a chart. So get to know this program. I might do a series of videos in the course of some basics on how to use it, but start using it. Start getting used to it. Over here, let's go to the Euro US dollar. Okay, I want to show some examples of how we can make money trading. So I'm going to go to a bigger, higher time frame. Let's get rid of some of this trash. I should have and would have and could have, should have, would have, could have got a little bit more prepared for this class, but I like to do things raw and right on the cusp. So let's go down to an hourly chart, and what we're going to do is I'm going to show you guys how we make money on a short trade, how we make money on a long trade. So I'm going to use this replay function, and we're going to come back to in time right here. Oh, all those candles disappeared. Oh man, what happened? All right, let's make sure my face is in the right spot here so you guys can see. Let's shrink it a little bit. There we go. No one cares about the details down there. All right, guys. So I'm gonna use the strategy I've already put out there on YouTube, and we're going to look for highly probable sell trade here. Okay, so you can see these levels. These are pivot points. I use special settings. You can go to the other video. I'm not going to go through it here to tell me where to enter. So what we're going to do here is I'm going to let price go, and we're going to wait for price to go up to the next set of R2, and then we're going to take a sell trade. So let's let it go. Okay, there it is. Oh, there it is, guys. So we are going to enter sell trade. Let's just say we entered right on that R2 level, and we want to hit this. We want to see if we get back down to that pivot. That's our take profit. Let's set a really good stop loss. Give ourselves plenty of room, and you'll learn more about how I trade and what's netted me the best returns in the course, in the series of 1% courses, 1% club courses, that I am working on right now. But for the sake of this, this is how we make money on a sell trade. So whatever system we're using, we find some set of rules that gets us into a sell position. Now, I'm going to tell you guys, this is an upward trend, and the trend is your friend. How dare you ever trade against the trend? You're crazy. You're taking a sell position on a trend. Well, look where that pivot is. Yes, I'm looking for a pullback, but I'm not looking for a major reversal of the trend. I'm just looking for prices veered pretty far off its mean, and now I'm theorizing it's going to come back somewhere to this pivot, and we're going to make money. See how if price comes down in this green zone, we predicted right. That's what short means. We sold this pair. We're betting that the US dollar is going to gain value against the euro. So now we're going to make money if we are short. Okay, let's see what happens. We go through some drawdown. Oh, look at now it's going. Now it's going. And we got there. Okay. So it took a little longer than we hoped, but we got there. Look, guys, we made it. And look, it even broke this trend line. Imagine that. So I want to explain the psychology a little bit here. Okay. If we just willy-nilly enter here because we just handed over the keys. Look, here's my system. I'm entering, which a lot of traders do, right? Great. Or if you use an EA that is setting this pending order right on that R2 level, and right as it posts, it hits, you're in it. Well, these are hourly candles. So you went through quite a few hours of pain and watching this. This is why, guys, this is where most traders mess up, because they entered here, look at these spikes against you, and it really made you think you were wrong. Right? It would have been awesome to enter way up here and never have to go through that, but that's just not trading. It's not going to happen that perfect for you. So all these hours, you're really not making any money. And quite honestly, most of the time it went against you. So you're staring at a negative number on your app or your phone or your desktop. And then all of a sudden it starts coming down. Well, then now a different psychological game is in play, right? You are in profit right here. Let me zoom in. You're in profit right here, and then it starts to come back against you almost to break even. And then you're like, damn it, I was wrong. And then it comes down. Damn it, I was wrong. Oh, I'm right. Oh, I'm wrong. Well, that's where it comes into play. You really need to give yourself time and let these things develop and not panic. Trust your system. Okay? So now let's look at what a long trade looks like. So now we're going to wait for price to get to an S2 level. Not all of them. Now, let me tell you guys something. I'm going to wait till it comes down to my daily support zone down here, because we just broke a trend line. So I think we're not going to we might see a little bit of a bounce off this S2, But I want to play it safe. I want to wait till we get down to a daily support zone. Just how I'm going to show you guys in my course. Okay, so we're not gonna care about this S2 level. Okay, now we're starting to see divergence, and boom, we got down here, right? We're close to it. So let's say I missed it. Oh, well, hit it again. Now we have divergence. We're in our bullish zone. All the things I'm going to teach you guys in my Telegram channel and my courses of how I plot these. Well, now I want to be a buy trade. This is a buy. And let's say I entered right on that. And again, I want to see if we come all the way back up to this bearish zone that I have on the daily. And man, this is going to be an awesome trade, guys, if it works out. I'm going to give myself plenty of room with a stop loss, and let's just see what happens. Go through a little pain, instant. Oh, there we go. Oh, we hit our pivot. Oh, we're shooting up. We're shooting up, and because of our patience, we are maybe going to get there. I don't know. Either way, look at how close we got, guys. We got all the way back up here. And you know, that is a great trade. And that's how you make money on a buy trade. And if you notice, guys, these moves in your direction and back, these waves for you and against you, this can shake you out as a trader. This can really hurt you if you're staring at that trade and you don't trust your system and you're constantly closing your trades too early and you're constantly closing them when they're a little bit of a loss and then it goes your way. This is that trap. That's why people think it's a scam and people are working against you. Well, these are all those people closing and opening trades in the smaller time frames. And let's just say institution traders see these big levels and they're like, okay, it's goodbye. Do you think they're staring at their trades? No, they're waiting till price is up here. Okay, shed some risk. Buy it, sell it. That's why these charts move in waves. This is how you make money. And I'm going to go ahead and pause the video now, and we're going to go back to the PowerPoint. All right, guys, we're back. So how do we make money? So hopefully that it showed you guys how we make money on a short trade, how we make money on a buy trade. We showed a perfect example on the world's most liquid pair. Okay, so let's make sure my face isn't blocking something important. Okay, what style will you most align with? Okay, so there is different trading styles. I'm going to try to speed things up here a little bit. But you can read the definition here. But position trading are long-term moves. So even bigger than what I showed you on those charts between those daily support and resistance levels or those bullish and bearish zones. You're looking for like a monthly or weekly chart, and you're looking to plant a seed at a good spot and just let it go. Typically smaller position sizes, longer moves. You're looking for 400 or 500 pips. Sounds awesome. Hard to do. Swing trading, style that I am probably the most. I look for intra-week, week or two moves. I love intraday moves. I love it when price goes where I want it to right away. But like I was showing you on that hourly chart, you may put a thing on and wait 9, 10, 15 hours, possibly days before it gets there. The real key, guys, is being patient. Day trading. So the term day trading means you're opening and closing your positions within that day. In equities traders, it means, you know, they're looking for positions right on the open and they want to be out of those positions before the close. Typically, day traders think you're crazy holding positions overnight, and, you know, how they form their plan. You know, they don't have to worry about swap or being on the negative side of swap or worried about aftermarkets fundamentals kicking in on balls. Now, us swing traders and position traders, typically we have to pay attention to the fundamentals because they can change those those drastically. Look at the month of March, the month that we're in right now of 2020. COVID-19 is drastically changing the markets. So as a swing trader, all that inventory now becomes at a higher risk. So you're just gonna have to find your own way. And then there's scalp trading, which are 1 minute, 5 minute charts. In my course, I'm gonna when people are practicing, I'm gonna give them some scalp strategies just to have fun and get a lot of trades on, get a lot of practice putting it in and watching it. Most likely go against you. All right, so what is a trading strategy and versus a trading plan? Okay, trading strategy, and I put a little fitness photo in here because I like to correlate this idea around fitness and how the fitness industry works, because most people kind of get it, right? A trading strategy might be, it's a set of rules, like we said here. It's a strategy and method of buying and selling, and the market's based on a predefined rules. Just like I showed you on the charts, we price hits R2, you sell it. Your take profit might be halfway back to the pivot or the pivot, and that's a set of rules. That's what got you in the trade, right? But that's not your trading plan. Your trading plan would be, what strategies are you going to use? What risk to reward ratios if you're going to use them? How much are you going to risk on each trade and position size? How many trades, what pairs are you going to trade? How many trades are you going to have on at once? That's your trading plan. And it's way more important than just the strategies. And a lot of traders just get stuck on, give me another strategy. The one I have is not working. Give me a strategy. And in the beginning, that taste a lot of things. But focus on the bigger picture, the plan. And I'm going to tell you guys, it's going to make you a much better trader in the long run. And the correlations with fitness. Okay, let's say you want to be a marathon runner and you got to get in shape. Well, are you going to do flat bench? So no, you're not. You might incorporate it as part of your fitness plan, but there's diet, right? So diet, as it fits to a fitness plan, is going, if you want to lose weight, you got to be calorie deficient. So just like trading, if you we all have the same goal, and that's to make money, but make money versus managing risk. Scalpers tend to use very large position size, very tight stop losses, kind of like a power lifter, right? A power lifter does sets of 3 or 4 with really heavy weight and doesn't do any cardio because he doesn't want, he's taking all these calories to gain size and strength. So trading is just like fitness in the fact you have to find what your goals are. And yes, everyone in fitness goal is to be a little bit healthier, but they have different exact goals where, like I just said, a power lifter wants to be strong and big and move a lot of weight really quick one time, where a marathon runner wants to have endurance, doesn't need that extra size. So he's not going to do strength training type exercises. So hopefully you guys start to see the correlation and you start to see the big picture. A trading plan is more important than what strategy you're using. Strategies are the exercises you're going to use to get your overall results of your trading plan. So in the courses I'm going to build, we're going to talk a lot about building that plan. I'm going to share my plan, and I'm going to hand over all the strategies I use, all of the things I use to make 1% a week in that course. And hopefully I pass that on to you guys, and you guys are able to see exactly how I do it. Because, you're going to be copying my trades for those 6 weeks. So you're going to see me do it. I'm very excited about it. Hopefully you guys are too. But the trading plan is way more important than just picking what strategies you're going to use. Strategies need to coincide with your overall plan. Kind of back to, is swing trading your style, or do you want to be in and out of the markets quick and dirty? All these have pros and cons, which we're going to go through as we go through the course. Okay, what is a trading robot or EA? So, a trading robot, like I said earlier, is a series of codes putting on there's different platforms, so there's different types of codes. They're relatively simple, but you can build these EAs as elaborate or as basic as you want. And basically, those trading strategies are built in, you could build a robot to execute those. So while you're sleeping, while you're at work, while you're playing with your kids, these robots are executing these trades for you with little or as much complexity as you want to put in them. Now, like I've said, I incorporate a very robust EA into my overall plan, which gives me a lot more time, and I act more as the CEO of that plan. And yes, I do have to discretionarily trade, but my overall trading plan incorporates discretionary trading at certain times and certain pairs, and usually it's to assist the EA and the trades it's taking in order to minimize risk. I'm typically not taking discretionary trades to add to my balance, although I do if it's highly probable, but typically it's to trade my way out of trouble. And if you take this course, you're going to see what trouble looks like, how I trade out of it, how I put my odds best in my favor with the using discretionary trades. Now, I will tell you, most traders, and way I teach, is you need to learn discretionary trading first, because you can't ever completely rely on an EA. It just will not work out for you in the long run, and that's what I'm going to teach. And you have to be comfortable putting discretionary trades in, and you have to know what to look and where to get those edges and how to get the edges on your side. And how are you as a trader going to act when one of these trades go against you? Are you going to have the discipline to close it at a reasonable loss and move on and emotionally move on? All those things we're going to teach in this course, and we're going to practice on demo accounts, and we are going to play a few games with it. All right, we're getting to the end here. So if you're watching this video, you also got a link to my Apprentice. Let's go ahead and put on the laser pointer. So you got a link to my Apprentice manual trade signals. So I post a lot of a trade analysis in here, 2 or 3 trades a week, where you're gonna see how I look at charts. This is designed for someone who's just starting out, or even an experienced trader who wants to get a different perspective, not having a good time. But you're gonna see how I look at the charts, how I plot those support and resistance zones, and I look for high probable trades. Over here in the Journeyman signals, it's the same as this. However, you're going to get the actual trade MT4 spit out every time I open a trade on my own live accounts. It tells you the pair, tells you the position size, tells you where I put my take profit and stop loss if I put one in, tells you the exact time I opened it, tells you something's going wrong and I closed it, and then it tallies up all of my stats each week, and I post those in both of these. I mean, we're this week we're already up 500 pips in the Journeyman channel, and it's Wednesday. So this one's a little bit more advanced. It's really this is the one, if you take my 6-week course, I'm gonna give you free access to as well. And typically the trades I'm taking, like I said earlier, are to help my EA system along and keep it running and to manage that drawdown. All right, you did it, guys. We both did it. We got through it, and hopefully you found some value. Hopefully you love the video. And like I said, I didn't make this video to pitch my courses, but simply I wanted to get it in front of people who are thinking of trading Forex, and I want them to do it the right way, and I want them to have a great experience with it. I love trading. It's my career now, and it's done very well for me and my family, and I hope it does for you too. Don't forget to check out my podcast called The Day Trading Plumber, and if you got any questions, guys, reach out. I will get to your answers as quick as I can, and as always, have a great week, And let's go make some money together, guys. All right. Have a great week, and let's get this done.